Okay, so here's the headline. That massive 44% import duty on a whole range of Harley-Davidson motorcycles, it's dropping. Not just a little bit, but all the way down to zero. Yeah, you heard that right. That is a huge price cut just waiting to happen for bike lovers. And you can bet this is a potential game changer for Harley in India. I mean, think about it. Models like the Street 750 and the Iron 883 are suddenly going to be way more affordable. They're really hoping this kickstarts their sales, which, let's be honest, have been pretty sluggish. To give you some perspective, they only sold 97 bikes in the last 9 months. 97. A price drop like this could easily double or even triple that number. But a deal this big always has a flip side, right? It creates these ripples across the economy and, well, not everyone is celebrating. In fact, for a lot of people, this is causing some serious problems. Yeah, that very same trade deal that's about to make Harleys cheaper, it has also sparked nationwide farmer protests. Unions have called for what's known as a Bharat Band, basically a national strike. So what's the big problem here? It's all about those zero tariffs. Because it's not just motorcycles getting the discount. The deal also removes import taxes on key U.S. agricultural products. We're talking about huge staples like maize and wheat, but also things like apples and soybean oil. And here's the core of that concern, straight from the farming unions. The fear is that opening the floodgates to cheap American imports with zero tariffs is going to completely swamp the local market. For an Indian farmer trying to sell their crops, that could be absolutely devastating. Okay, so moving from the farms to the financial markets, this whole changing economic climate is also showing up in a really interesting way. There's been a historic power shift in who actually owns the Indian stock market. And check this out. For the very first time, domestic institutional investors, we'll call them DIIs, now own a bigger piece of the Nifty 50 pie than the foreign institutional investors, or FIIs. Now that margin looks small, but don't be fooled. This is a fundamental change in how the market works. So what's driving this huge shift? Well, it's the steady, consistent flow of money from everyday Indian retail investors, often through what are called SIPs, or systematic investment plans. All that domestic money pouring in makes the market stronger, more resilient, and way less dependent on what foreign investors decide to do on any given day. And yet, just as the story seems to be all about domestic power, there's a twist. After pulling money out for 3 months straight, foreign investors suddenly came rushing back in, pouring over 8,100 crore rupees into the market in just the first week of February. So that leads to the big question, right? Is this a sign that foreign confidence is back? Could this be a direct result of that new trade deal and the overall direction of the economy? Everyone's watching to see if this is just a blip or a real trend. Okay, so in this kind of dynamic environment, you're always going to have clear winners and losers in the corporate world. Let's take a look at a few examples of how this is all shaking out. This is a perfect tale of two startups. On one side, you have the gaming giant Dream 11. New regulations completely flipped their fortunes, sending them from a big profit to a nearly 500 crore rupee loss. But then you look at Chios, the tea cafe chain. They're still in the red, but they're moving in the right direction, slashing their losses by getting their expenses under control. And it's not just the startups either. We're seeing some really positive signs from the big established players. SBI's profits have just surged, making it India's second most valuable bank. You've got IKEA planning a massive 2,000 crore rupee investment to expand. And even over at Vodafone Idea, a promoter buying up a chunk of shares is a huge signal of confidence. And that IKEA expansion is really interesting because it points to a deeper cultural shift. It's this move away from the traditional, heavy furniture that's meant to last a lifetime towards a more modern, flexible style that you can assemble yourself. IKEA sees where the Indian consumer is heading, and they're betting big on it. All right, let's zoom out for the final piece of the puzzle. Because everything we've talked about, all these shifts inside India, is happening against the backdrop of a much bigger global game. Geopolitical tensions are redrawing the economic map, and it's forcing everyone to choose sides. And a perfect example of this is the high-stakes standoff over semiconductors. You have the U.S., worried that China might gain control over Taiwan's critical chip industry, so Washington goes to Taiwan and asks them to move a huge 40% of their production to the U.S. for security. And Taiwan's response? Pretty much no way. They said it would take decades to rebuild that kind of complex supply chain. Meanwhile, China is making its own power moves. They're actively trying to weaken the world's reliance on the US dollar. How? Well, they're telling their banks to stop buying new US Treasury bonds. They've been cutting their US debt holdings for months, and they're pushing aggressively to get the yuan used more in global trade. It's a clear strategy. So when you put it all together, from a trade deal that impacts everything from Harleys to farmers in India to the rise of local investors, all the way to a global tug-of-war over microchips and currency, it leaves you with one final, pretty provocative thought. Are we watching the dawn of a new economic superpower?